Good morning. How you all doing? So, interesting patterns here. Market still strong, entering the void. I've marked, which I don't think is much of a reference point, but it's the only reference point looking at the daily chart, and it's on all of the charts. The top of this bar here, where it tried to stall, came off of the low and came back up before heading lower after the wide range bar igniting to the downside from an extended move. So I would say that is the upside target for today, unless something really gets rolling here. And we don't know. You see the current week's bar is right there. Maybe it never gets much further, but it is above the highs here. So 283 or so. And so clearing the top. Oh, let's go to the charts there. That would help, right? Thank you, Daniel. So there you go. There's the line in the sand that I have marked as a potential stopping point. So what I'm thinking here, right, is that the NASDAQ is underperformed. They're not. If the market goes up, the institutions, while they've been rotating out of the tech to some degree, they're going to come back for it because they can't miss out. They cannot miss out if tech's going to take off again. So, but the question is, that the Russell's been going up. Internals are getting a bit, cooked here. And risk is increasing on the long side. Nonetheless, we don't trade internals. They just give us, when we're coming into danger. That doesn't mean markets can't go up some more. So looking at the 60-minute of the Qs here, and they're up above this level, right? You can see the bottom right chart went up to 283.5, right about there. Not a big gap, right? Not a gap that's like, wow, that's too big, let's short it. No, it's more of the kind of gap that if it gets sold into, it's got a base. And so when we look at intraday patterns, we look at what happened the prior day. Did it base the prior day, or was it rallying the prior day? Was it going down the prior day? And that leads us to some bias as to the probabilities of what happens when stocks gap. And that's all covered in my gap course. So would a base the prior day and a gap up, if it comes into that base, we think to be a buyer on some type of reversal pattern. Now, if it just cuts through that, like a hot knife through butter, well, that's good information too. We know that sellers, supply are coming in there heavy and hard, and we probably got a short-term top day. So none of that is a prediction. It is a thought process as to what we have, what should happen, and in a strong move, buyers should show up there, or maybe it's just 5-minute high and it takes off since it was resting the prior day. So we have historical patterns as to what should happen, what traders should do at different reference points, and then we see what actually does happen. Okay, so been resting here for several days. You got a red bar ignored. It's coming up out of the top of the base yesterday. Well, it went from the bottom of the base here to the top of the base, but then it rested, meaning it went sideways at resistance, and that's bullish. Now, we'll see if this gap up now is supposed to go higher. Black and white. It's supposed to go higher. If it fails, that's good information. We'll see what actually happens, but it's supposed to go higher. Okay. And the Russell, as you know, has been on a tear and been leading. It's been a laggard for a long time, but now it's leading. And so with yesterday's gap up, it's higher right now, 163, 4, give or take 163 and change, whatever. It's gapping up here after yesterday's gap. And this is where it came down into the gap fill yesterday. And so it came a little bit different, as you can see over here, and then made a little W bottom, and then went back up to the high and it rested. So yesterday's low becomes a pretty important place for prices to hold today. since it came out of a 2-bar consolidation. It gapped up. Buyers showed up on the dip. It went back up, and now it's higher. And so it should keep going. And go to where? Well, it's got pretty much a void that it can go a significant amount. Right? So I like this pattern better than I like the Qs, but it's already going, but it doesn't mean it can't continue to go. But look, it's gone up from 142 up to, 163. That's a heck of a move in a short period of time. I mean, everything rests eventually or pulls back a little bit, which is normal. So spiders, and we'll get to SPX, right? That popped above the highs there yesterday and held on to the gain. Right? So there's the little dip that comes into support. And actually, buyers stepped up before it actually got there. Right? Now, forget that this is red. I just to show you what I mean. This is what you want to look for with a gap. Meaning some traders, they just can't help themselves from the excitement of pressing the button, right? So maybe they look at a 1-minute chart or a 2-minute chart and it gaps up and they buy it over the high. It's okay. Sometimes they run, right? But just one bar, you can get whipsawed, and then, it takes out the 2-minute low and, they sell. We're a little lost, and then it goes down, and then they buy it again, and then they sell and they buy it again. Before you know it, they've gotten their heads kicked in, and then the move starts. So anyway, gap up, what's it going to do? Okay, this is a 60-minute chart. And so it jiggles around here and it pops up. And as it starts to come in, we look at this area here, the top of what was resistance to become support, and buy it down there. Once we get, let's just say this bottoming tail bar was a little 5-minute bar down there, you buy it. And then it looks to go higher since this is an uptrend. Well, it didn't get down there. The buyers stepped up before it got there. That's another bullish sign, meaning that we know that there are bids hanging down here looking to get long. Well, they had their bids higher. That's how anxious they are to get in. And they held it and went up, and it kind of was a grinder afternoon. It was really like a sleepy time, honestly, just going nowhere. But there you go. It was aggressive buying as far as on the pullback. And as prices go up, obviously, more and more become a little apprehensive about buying after prices have gone up a little bit. So we have a nice big red bar ignored, that giant day on the tweet, and the market's cratered. They woke up and said, hey, big deal. Politicians jawboning really doesn't mean much. Let's see what happens. They flip-flop all the time. And so now it's got this room to run. And let's just drag this one, even though it's green. Let's take this one. We got a red one here. Get my fat fingers to do that. And we just put that over there. And that would be our upside target for today. Right? We have to pick somewhere since it's pretty much a void. And let's just do this. Scrunch it up a little bit. And you see it comes up around here. And how relevant is that high versus, this move down, the bottom, the move up? I would say not very relevant. However, it's the only thing other than going back up to the high. And since it's been moving up for a little bit, I think from here to here, it's a place to pick on the chart as a maybe spot. So we'll see. And of course, 350, which would be just a round number or not a number, that might be focused in any event. As this relates to SPX, since it's Friday, I'm looking at that as being our line in the sand before danger. So, having to move from here, and it's already up a little bit, of course, having to move up to here, I'm thinking anything above 3,500 would be safe. And that's kind of a guesstimate, and it's not, and we don't even have two lines of defense. Okay. We've got this area. And so that's the best I see. other than waiting for it to create resistance. And how does it do that? Well, as trading goes on today, it'll form some kind of a pattern. And I'm just picking this because it's what I'm seeing here. It could be something like this that starts to break out, and then it comes down under this consolidation, and then an area above that would be something that we could use. Right? Down below, I don't know, below 3360. So we got yesterday's low. I know that's really far away, but the way it went up prior to yesterday, it doesn't leave much of anything. So if you don't want to, have a heart attack in the middle of the day, I'm exaggerating, but you know what I mean. If you've ever traded SPX credit spreads, they get close to your strikes, it's a little nerve wracking. Anyway, so I would look to see something below 3360. If there's anything there. If not, you're going to have to wait, or you pick something else. 3,500 has some premium. Okay. So I think that's being a big round number. I think that is what I would call the safe zone. You've got this line of defense, and then you've got a round number. And for it to move from here to there, just kind of makes common sense that there'd be some selling at that level. And then look, if you had a tick extreme going up, NYSE tick extreme going to plus 1,000 on the way up, that's going to stall things. And then look, intraday traders comes with, looking at what's happening in the moment. And that's what we all have to do. Look at what's happening in the moment. We have to have a method and trading plan as to how to interpret what's happening in the moment. Because if you don't, that crazy thing called your brain that's between your ears is going to create all kinds of subjective information going through your head. So when I talk about these patterns that historically, this is what should happen if prices are here, and this is what should happen at these reference points, that's the method as to understanding price patterns and what they do based on the patterns that preceded it. And that's what MTS is about. Understanding price patterns, understanding what happens in the moment, and then how to interpret what happens as it evolves. All right, let's see where the futures are. Well, we looked at SPY. Let's look at the transports. Right. We talked about how bullish this would be. If it could negate this head and shoulders top, it absolutely did it. And, it's right there near the all-time highs. And wouldn't that be a bull trap, right? I don't know. Transports, which have been lagging forever, making new all-time highs, right? The market's pushing up. Our internals giving us a sell, which they haven't done yet. Right? They haven't done it yet. I was surprised. I thought the sentiment would pop above here, but yesterday was a dead day. So it just might happen today. Breath was okay, decent yesterday. It was decent, even for a dead day, because it started high. And we've got breath now coming up to a plus 200. So coming into this void and a run up, right, these will come into alignment. And you'd say, well, just looking at this pattern, if it runs up, I would know that danger's anyway. Well, what good is the internals? I'll tell you, because sometimes you get patterns like this, and these internals aren't even close to a bearish level. And that's the value of them. And so when you start getting momentum moves, the internals tell you that this has got plenty of gas in the tank. Whereas what they're saying here is if this runs up, there isn't much gas left in the tank short term.
Yeah, Greg, in the video last night, I said if we were not at extremes, I would be pounding trades on the long side here. But
all right, there you have it, folks. There you have it. And it's not a large gap up, whatever it is here percentage wise, but it's not like it's gapping up huge here. It's gapping up, but definitely buyer on pullback. All right. Okay, let's continue here so Dan can cover the pounders. All right, S&Ps. All right. going up toward that reference point up there. So it's got room to run. So look, in a market like this, where things are at, you pound it and you keep an eye on the exit. I mean, maybe it makes a monster run today. It gets through here. You've got this bottoming pattern, so we'll see. We'll see. Follow the trend. NASDAQ futures just starting to make that peekaboo above the highs. Let's scroll that back a little bit. You can see right there, buyers anxious to get in. YM pushing up, kind of leading the way a bit. Watch it at that area. The Russell, it's a little extended. And so you might say, well, the Russell already ran up. What about the others? How are they going to keep going? Well, last, I guess, year or so, I can't pin it down to the dates, but when the Russell starts to underperform, the others begin to outperform. And they've kind of had this back and forth scenario. It doesn't always happen, but that's what's happened lately. So not so much of a concern if the Russell starts to underperform. We would actually want to see that. Then the money starts rotating to the others. Bonds still heading down toward our target here. And if they don't hold, oh boy, I got lots of room to drop, but they'll stop there. And oil down a little bit. Just kind of jiggling, not bad since it's up at resistance. Gold improving. It's what we want to see. All right, red bar ignored. I'm telling you, watch this next weeks or so. Just hanging out here. This turns out to a shakeout. This is going to make a big move. Just got some work to do. And silver, it's working on repairing the damage as well. So there you have it. Happy Friday. All yours, Dan.
All right, great. Thanks. Yep, old 0 DTE day. We love them. So I have a bullish bias. We just got to deal with the gap and pick our spots. We have 100% bullish positions that are all fine. The only exceptions to 100% bullish, well, Zoom, yeah, we had a condor and we closed the call side yesterday, so we'll let that expire. The put side at full profit. We shorted a naked call on this climactic thing. Yeah, you're right, Jake. Facebook, yeah, we have a call spread that we entered on 2 days ago, so Wednesday. And I'll keep an eye on this about possibly legging into a condor. The strikes over last week's high. It's been, lagging some other things, but also tan. I want to get it into a call spread today. It's very similar to that ICLN. They're clean, renewable energy, whatever the heck's in it, ETFs. But everything else is fine. You can ask me if you have any questions on opens. Let's see, this thing's ripping up to 16 bucks. Look at that, 10 bucks to 17 pre-market. Wow. Walmart's not really a big gapper, but I just want to keep it on my list. It's bullish consolidation here. Maybe it'll be a candidate for a weekend trade. We've been watching General Electric Dog to see if it would bottom. You got two nice wide range bars here recently with red bar ignored. Look at a big gap up to 7. So it could be putting in a long-term bottom if you're like it fundamentally for whatever. Hey, John Newman, your drop down, if you change it. So we talked about this MJ on this retest and then gap day, and it's been on a tear. But Greg, I texted you. This could be bottoming. I mean, it's had many false starts, but the monthly, I know the month's early. It's only October 9, but this is a W bottom. That's a W bottom. Momentum move, little bounce, retest. You know, daily had a deep retracement, so it's definitely worth watching. Tilray had a big old move yesterday. Somebody asked me in the morning um, how it looked. I said, good, buy it, go for it. It looked good, as what I call intelligent bottom fishing. BBBY, beautiful 15-minute chart. You know, it's holding that gap very well. It's too extended for me to personally want to swing it, but day trading looks fine. It's a beautiful 15. Let's see, YouTube on Today's is asking about JKS. Yeah, I would stay away from, you know, trying to buy any of these solars. They've had crazy runs. This is actually one we can keep an eye on to also sell a bear call credit spread over the highs. Look at RUN was one that had a beautiful M top retest. So yesterday would have been a beautiful time to sell that out of the money call spread. APHA for David. It's too extended for me. I think we can find better. Sam Xilinx. I mean, I have no idea, Sam, what you want to do with that. You have to tell me. I have no idea. The gap is monstrous. They're in, you know, buyout talks. They're in buyout talks, so from AMD, so that's why AMD's down. This is from McGraw because he's new here. He's new. So I don't know. I have no idea what you're asking me. If you're thinking about scalp shorting it, I'd say maybe. Sure, put it in a window. I'll put it in a window. I would prefer selling a 0 DTE call spread 30-minute low. So I'll keep an eye on that. GNMK for Paul. 1562. It's a bullish gap over a red bar, so that one's worth watching. You got to put it in a window and see how it sets up on the 5-minute chart. GFI 1268. 30-minute high. 30-minute high would be okay. GFI. Here, let me just type these here in case you all keep scrolling up on me. All right, Netflix. These are for Paul. Yeah. Netflix 1, 2, 3 gap breakout. You know, we just got to, you know, we got to watch it over the first 5, 10, 15 minutes, see what the chart does, see what the internals are going to do. But I like it. Could be a day trade, sure. Yeah, we have a put spread for next week. That looks great. Rio, you can tell it's an ADR with all these gaps, but it's a gap breakout. McGraw, this would be a great put spread candidate, just under last week's low. So let's keep an eye on that. CDE 790. No, the void is not as good as GFI. GFI void is much better to me. Dio Gracias. Chewy, yeah. Some people in the room were watching that yesterday, and I told them my desire would be wait for today and buy over the high. So that's worth watching. Let me continue here. MVIS. I don't know what the stock does, but it might set you up on a day trade. See if you can get a double bottom. Morgan Stanley, this was the one that was buying Eaton Vance. They talked about it yesterday. You know, some of these banks and airlines, I think, are put spread candidates. We did a put spread on Love. JetBlue showed better strength on Wednesday. Look at that. Had a nice gap breakout. JKS. Yeah, I mentioned. Yeah, JKS. It's based in there at the low. Yeah. Yeah, JKS. You know, I mentioned TAN. which is what JKS is. Actually, I like tan better here. Tan looks better. Gap and crack closed at the low. Now it's pre-market basing at the low. Target maybe this gap fill over here. Just eyeballing here, 71.50 to 72. And GME is too extended for me. No, it's gapping down. Maybe, but it looks like it's going to take a while for it to set up. All right, EXTR gap breakout. See, the gap's too big. The gap's to my target right here. But another bottoming pattern. You know, the 20 MA curling over. Oliver's asking about Piton. Yeah, Piton's on my list to short a call spread or day trade. But the problem is now it's gapping up and you got this support. So the entry is going to be a little tricky, but but notice, see, it did accelerate. It did accelerate from the 20, but just compare the speed. See, this is controlled strength. Yes, it's an ugly reversal bar, but do you all see this? This is beautiful. Compare the distance of the acceleration from the 20 and volume. So this one is a superior daily climactic sell versus Piton. They're both call spread candidates, but I just want to highlight, just look at the distance of the 20 here. AMD, short $80 put, there's no pattern, unless you don't mind owning it. I mean, it's a bearish gap. I mean, I don't short puts unless. All right, 346. So we're in profitable territory now on this long call. If you happen to hold it overnight. Now, yes, that long call was meant to be just a late day breakout. Let's go ahead and let's just take the money, because it was the swing trade I wanted to give next week's call. Let's see here. Yeah, it's 9:31. Let's just we'll give it another dime here. So I'm going to move the stop 345.51. Q's selling off the most though. Amazon coming in hard, Apple coming in hard.